Hello and welcome back to the channel. So today I'm gonna do a trade recap, just like a little bit of market review of a trade I took today. I took an ICT silver bullet trade today. Um, I end up in profit, like end up positive for the day, but I'm just gonna break down what I was looking at and what I should have been looking at. Now that I'm looking back at the charts, um, I wasn't following most of the what the chart was telling me. Right, I was looking at the price. Um, so just take a look at the 15-minute chart. So on the 15-minute chart, you could see that at 8:30 here, price is here, right? What the CPI number did is it ran out the Asian high and the previous day high that I had marked up here, right? Now this is buy side here, but what CPI did is it ran out these highs, then broke down, went below the Asian low, went back in, and then dropped. Now, when I saw that, what I should have thinking is like, okay, price is taking out previous day high. Where it's gonna go now? Previous day lows, right? But I didn't remember that. Just to be fully transparent, I wasn't looking at. I saw the fair value gap on the 2 minute, and I'm like, okay, it might want to, um, you know, go up now and fill in these fair value gaps that it left behind. So that's what I was looking at on the 2 minute, but it didn't. It wasn't ready to do that, right? It was in a sell program, and then come over here, it's in a buy program, right? So let me show you what I saw. So when I saw that price took out Asian high, previous day high, the next drawn liquidity would be the previous day lows, right? So, and previous day lows right here. So let's go down to the 2 minute chart. Let me show you what I was looking at. So here, make this a little bit bigger. So here I see price left a fair value gap here on the 2 minute, and I had a limit order here to buy. Stop loss was about under here. You could check that video out on my channel. I posted on my channel. I'll also try to link it above here, so it might be linked above here. So just check that out. You know what I'm talking about. The stop loss was here, and once it reached a 1-to-1, I took a partial off, and then I raised my stop loss to break even and better for risk-free and plus commission. But I was looking at this to be get this gap to be filled in, right? Looking at this gap to be filled in on the 2 minute chart. So that was my draw on liquidity inside the silver bullet. But like I said on the 15-minute chart, price already taken out buy side here. So the next side will be previous lows. So the bias is that I took a counter trade, and because I pay myself, and you know, as ICT always says, partial pays. So I paid myself and I end up net positive. But looking back at the chart, I should have targeted the previous day lows, and usually under the previous day lows or high, you could check your chart out for this. There's a sometimes it's just a low. This is being broken on the left side of the chart, a fair value gap, an order block, and then it rally rallies off of that. So if I went down to the 1 minute, show you where. So right here, let me remove this here. If I'm down on the 1 minute, I have taken the silver bullet trade right there. Stop loss above there. Target previous day lows. But as I said, there's always, if you look at the left at the chart, usually wants to dig into that sell side liquidity there. So you target like a 1 to 2. I usually do like a 1 to 2. So it would be right there. That's typically what I go for, like a 1 to 2, and then I'll leave a runner. But yes, this would be like a trade, right? Digging into the sell side here. Now, the next thing is just recapping now. So that was the trade that I took today. It was a counter trend trade because the trend was still, price was still going lower, and I said that in my my review, in my live trade that I took. I said that once I see that the 1 minute fair value gap got disrespected, I'm like, okay, price is not respecting these PDRAs, so it probably wants to go down, and that's what actually it did. So on here is a 15-minute fair value gap on the 15-minute over here. As I said, price would usually, if it's a high or low, price drop down into a fair value gap, order block, and then bounces off. So once price does that, I would have dropped down to my 2-minute chart, which is like my favorite chart to take my setups on. Price rallies here. Could have been a buyer here. Price rallies again. Could have been a buyer here. So price taken under there. Price under these lows or under here, and then take these setup. So that is a trade setup as well, like a trade idea. But this is the trade that I took today, not this one, but I was looking for price to rally back up. Price didn't rally back up. Price actually came back down, stopped me out in a risk-free trade there. Ended with like, I believe, $300 for the day. But this will be another trade idea. Wait till on the 15-minute chart, wait till price takes out previous day lows, find some support in a fair value gap, order block, so forth. Once price rallies with a displacement, look for that displacement to come back, showing that price wants to go up. Enter at the midpoint of that, stop loss under the lows, and then take your 1 to 1, 1 to 2. You could even target these highs. You could target these highs. You could target this fair value gap here. So there's a lot of potential, and it's a learning process for me. So I just wanted to come on here and just give you an idea of what I was thinking when I took that trade. And yeah, so expect more of these trade reviews. If I do live trading videos, I'll give you an idea of what I was thinking, and just being fully transparent. I was taking a counter trend here, so I was getting the direction I was looking for. The rally hasn't done yet. It wasn't completed, and it was going for the lows. So should have looked for a more sell, and then under here, once price rallies, you could take that up, and then take that right up there. So with that being said, thank you for coming. Hope you enjoy. See you soon.